Did you know that General Motors is Tesla's biggest competitor in the race to make electric cars? How did GM, a traditional car company that has a long history of making gas-powered cars, become a major player in the market for electric cars? We'll look at how GM is changing its history and going up against Tesla with new models and creative tactics in this video. Are they really a threat to Tesla's position as the leader, or is it just another case of a big company trying to catch up? Analysts predict that GM will overtake Tesla by the end of the decade if it can boost EV sales, which it now does. Even though Tesla is an EV-focused firm, it does poorly on environmental, social, and governance (ESG) criteria, while GM leads the car industry in this category. Consumer trust is increased by GM's capacity to grow without price gouging, which Tesla does not yet shown. Without a doubt, Tesla is the market leader for electric vehicles, EVs. However, will Tesla be able to maintain its dominant market share? Or will it lose ground against GM, the century-old auto giant? In theory, GM is in a better position to grow, draw in ESG-conscious investors, and offer cars at a price that American buyers can truly afford. What do they have to wait for? EVs currently make up significantly less than 10% of all auto sales. President Biden established a national target in 2021 to increase EV sales to more than 50% of overall sales by 2030. Industry analysts are less hopeful, despite the fact that many auto executives believe this was a realistic aim. In any case, during the next 8 years, this industry will experience significant growth. At the moment, GM claims a meager 6% of the EV market, trailing both Ford and Volkswagen, while Tesla holds a commanding 66%. That is expected to change, though. According to LMC Automotive, GM will surpass all other EV manufacturers by 2030, holding an 18.3% market share, while Tesla will only hold an 11.2% share, trailed by Volkswagen and Ford. Why? Compared to Tesla, GM benefits from scale. Additionally, they have a proven platform, unlike other large automakers, instead of converting gas-guzzling cars into electric vehicles by simply adding a battery. The Ultium platform, which GM has been developing, centers EV systems and installs batteries straight into the car structure. Production is anticipated to ramp up more swiftly and smoothly than it has in the past now that they have a framework in place. Even if they solely produce EVs, Tesla lacks the existing manufacturing infrastructure and hence does not have the same capacity to produce vehicles at this size. Financials of the company. Right now, Tesla is by far the most profitable business. Its net profit increased 98% year over year to $2.3 billion in the second quarter of 2022. GM's net profit for the same time period was just $1.7 billion, a 40.3% decrease from the previous year. Given that GM has more well-established procedures in place and sold 578,639 cars in Q2 2022 compared to Tesla's 254,695 deliveries, this may appear perplexing. The closest comparable figure to sales that Tesla publishes is deliveries. Why, therefore, was Tesla so much more successful? One of the many reasons is that Tesla doesn't spend any money on marketing, which eliminates a significant cost. In recent years, it has significantly increased the cost of its cars. However, regulatory credits also play a significant role in Tesla's present profitability. Demand for Tesla's regulatory credits will decline. Automakers are compelled to sell a specific proportion of EVs in California and 13 other states. They are forced to buy regulatory credits from other manufacturers who have an excess of them when they don't. Since Tesla only sells electric vehicles, it has a lot of regulatory credits that it sells to other automakers, including GM. Let's examine how these credits affect Tesla's financial results. While other automakers paid Tesla $1.58 billion for regulatory credits during the same period, Tesla's net income in 2020 was $862 million. Without these credits, Tesla would have had a negative net income. Tesla made $5.64 billion in 2021, which included $1.47 billion from the sale of regulatory credits. Although these credits accounted for a smaller percentage of 2021 profits than they did in 2020, 26% of net profits is still a sizable amount. Other manufacturers, such as GM, will no longer need to buy these credits from Tesla as they increase their EV output, which will boost GM's bottom line and decrease Tesla's. The Inflation Reduction Act's effects. Customers who purchase the appropriate kind of electric vehicle can receive a revised $7,500 non-refundable tax credit under the Inflation Reduction Act. The most significant difference is that the vehicle itself must be manufactured in North America, and at least 40% of the raw materials used in the battery must come from the region. By 2027, the 40% threshold will have gradually increased to 80%. Customers can only receive a $3,750 credit if the battery percent criterion isn't fulfilled. The bulk of these materials are sourced from outside of North America by GM, Tesla, and the majority of EV makers. The biggest markets are in Asia, but there are also some in Africa, Europe, Australia, and South America. This implies that the majority of EVs will only be eligible for the $3,750 credit, particularly as the necessary percentages increase over the next few years. The tax credit's restriction to individuals earning $150,000 or less or $300,000 or less for couples is another important aspect of the program. The offer is also limited to vehicles that cost $55,000 or less, including cars and trucks that cost $80,000 or less. Instead of keeping EVs as luxury goods, the goal is to encourage automakers to create vehicles that are affordable for regular Americans. Given that EVs are currently trending toward higher prices, this changes who automakers may promote this credit to. Comparing the two businesses side by side, we can see that Tesla has been boosting the price of its EVs while GM has been dropping them recently. The current pricing of the Chevy Bolt is $26,595. The base Model 3 with rear-wheel drive, which retails for $46,990, is the only Tesla model that is currently eligible for this tax credit. Because of the income levels that the tax credit targets, this pricing difference is significant for more reasons than just the tax credit itself. Given the $20,000 price differential, more Americans might choose GM's offering over Tesla's. Additionally, in the fall of 2023, GM plans to release the first Silverado EV. Its starting anticipated list price is $39,900, which is far less than the $80,000 ceiling for EV trucks. Fortunately for manufacturers, the $200,000 car cap that was previously imposed on this credit has been lifted. As long as they are within the income criteria, this enables the greatest number of consumers to claim the tax credit. ESG perspective. GM is more appealing to investors as environmental, social, and governance. ESG investing gains traction. This may come as a surprise because you would think that the environmental aspect of ESG would be sufficient to place Tesla at the top of the list. However, the business was removed from the S&P 500 ESG index in May 2022. A number of reasons contributed to this. First off, despite producing electric cars and making money from the creation of green energy, Tesla has no plans to become carbon neutral. It settled with the EPA in February 2022 after years of violations of the Clean Air Act. The state of California is also looking into the company's waste management practices. On the social and governance front, Elon Musk has been a foul of the National Labor Relations Board for his anti-union views and unfair labor practices, and Tesla has recently been involved in a number of lawsuits demonstrating racial discrimination in the workplace. However, in addition to aiming to achieve carbon neutrality by 2040, GM is also requesting that its suppliers do the same. Although the investment is now very minor, it is actively working to grow its line of electric vehicles as well. On the governance side of things, GM also has really impressive numbers. Women hold half of the board positions at GM, which is led by CEO Mary Barra. In comparison, just 2 or 29% of Tesla's board members are female. Additionally, GM provides its employees with an anonymous whistleblower mechanism that allows them to report wrongdoing without fear of reprisal. ESG investors may have significant influence over corporate policies and stock prices, especially in the EV industry. When considering these ESG factors, GM would undoubtedly win out due to the way the businesses are now operated. GM versus Tesla. GM might have a better future. You would think a firm that just sells EVs would have a better future in the market, but if GM can create vehicles that thrill buyers and increase EV sales, it looks like it will dominate the market over the next 10 years. GM has the potential to become the new market leader by 2030 due to its strong ESG standards, ability to grow, independence from regulatory credits, and readiness to lower the price of its cars for average Americans. With a well-known person leading the company to spur innovation and draw in top talent, Tesla is currently the more interesting brand. If you enjoyed this deep dive into GM's surprising rivalry with Tesla, don't forget to hit that subscribe button. Join our community for more insightful videos on the latest trends in the automotive world and turn on notifications so you never miss an update.